The entrepreneurial journey goes a lot like this. I have an idea and I want to bet on myself. Then you go out, you make your first dollar, you make your first $100, you make your first $100,000, and now you're making a couple $100,000. Well, that's exactly where we're gonna zoom in today. That business owner that's making a few $100,000 of income and showing you a specific strategy that helped to save somebody $61,200 in taxes just by having their company set up correctly. This is all about LLCs and S-Corps. If we haven't had a chance to meet, my name is Luke Turner. I am the co-founder of Moment Private Wealth. We help athletes and entrepreneurs get smarter with their finances. In today's video, we are going to be specifically talking about business owners making a few $100,000 in profit and how their entity structure, an LLC versus an S-Corp, could make a huge difference on how much money you are keeping in your bank account. Let's dive in. So there are a lot of misconceptions out there around the difference between an LLC and an S-Corp. And let's talk a little bit about some of these differences. So let's just cut to the chase. How can we save you money if you are structured properly? So first, let's give a little bit of background. What is an LLC? What is an S-Corporation? So an LLC is a limited liability company. And typically what that means is that anything that happens in that company, the liability is limited to the money that's in that company. Big benefit of an LLC. But one of the biggest problems that people run into is something called self-employment tax. So when you think about self-employment tax, you've probably heard that term before if you've been running a business for any period in time. It's 15.3% that you have to pay on top of your federal and state income taxes. Seems crazy, but it's really not all that crazy, because if you think about how you were making money previously, the way that self-employment tax is calculated is it is the 7.65% you pay in payroll taxes as the employee plus the 7.65% in payroll taxes you pay as the employer. Because you're self-employed, you have to pay both sides of that. If you look at any W-2 employee, they're still paying that 7.65%. But how does this apply to you? So let's think about somebody who runs a business and they're set up as an LLC and they're a sole proprietorship. So think about this as somebody who's running an online business, they're the only employee. And let's do an example here and say that they're making $500,000. So if we run this example and we say that somebody's making $500,000, that means that they are going to have to pay approximately $76,500 in self-employment tax. And a lot of business owners come to us at this point and they're thinking, how can I avoid these self-employment taxes? And that is incoming the S-Corporation. So the S-Corporation is a great way to potentially save on self-employment taxes. And let me show you exactly how you can save on those self-employment taxes. So first and foremost, the biggest difference is that you have the ability to pay yourself a salary, and then there's also a component called distributions. Okay, in an S-Corporation, the biggest benefit that you can take advantage of is that on your wages, you're still gonna pay that self-employment tax, but on the distributions, you're gonna avoid that self-employment tax. So let's look at a side-by-side example here. So on one side, we have our LLC, where we're making $500,000, we're paying approximately $76,200 in self-employment tax, 15.3%. How does this play out in the S-Corporation? So let's assume that you're gonna pay yourself a $100,000 salary. The government says that you have to pay yourself a reasonable wage. Okay, so we're gonna pay ourselves $100,000. So in that $100,000, we are gonna have to pay self-employment tax. So 100,000 times our 15.3%, that gives us $15,300 that we're gonna have to pay in self-employment tax. But this is where the trick comes in. The extra $400,000 we can take as distributions, and we're going to avoid that 15.3% self-employment tax on the entire amount. So if we do the math here, we're saving over $61,000 in taxes you're paying just by having your company set up properly. These are the types of tips and tricks that you need to be really mindful of as your business grows from 1 employee to 2 employees, or in this case, from $1 in revenue to $500,000 in profit. These are really, really important concepts that you need to be thinking about and mindful of. One of my mentors said this to me, and I think it rings true across all business owners and entrepreneurs. What got you here won't get you there. And this applies as it relates to tax strategies and financial planning strategies. So if you are a business owner and you feel overwhelmed with all the financial planning strategies that are out there, feel free to reach out. In the description below, there is a link to schedule a meeting with me. We can talk through some of these concepts and talk about the 3 ways that we work with business owners just like you. All right, if you haven't already, please subscribe to the channel below. We're gonna be putting out more and more content just like this. And again, if you enjoyed this video, there's a link to a description to another video down below. Would love for you to check that video out. I think you'll enjoy it. Until next time, thanks.